Imagine a nation where 183,000 new jobs appear overnight and the unemployment rate dips to 4% from 4.1%. Well, that's exactly where you live. That's what happened this week in America. And it is shaking up the real estate market in ways you wouldn't believe. Hi everyone, I'm Eli Weissman, your trusted financial expert with over 25 years in the industry. Let's dive into this week's economic whirlwind and how it is affecting your real estate decisions. At the start of the week, the 30-year fixed mortgage rate averaged 7.12%, but as economic data unfolded, we saw a slight dip ending at 7%. Meanwhile, the DSCR loans commonly used by real estate investors held steady at 8.26%. These shifts were largely driven by the latest employment reports and Federal Reserve speculations about future rate cuts. The week kicked off with the ADP employment report on Wednesday, showing 107,000 private sector jobs added in January, well below the expected 145,000. This signals a potential cooling in the labor market, reinforcing speculations that the Fed could pivot toward rate cuts sooner rather than later. Mortgage rates reacted slightly to this report, but we're still waiting for more confirmation from government data. Thursday's initial jobless claims came in at 219,000, slightly higher than last week's 213,000. While not a massive jump, it suggests that hiring might be slowing down as businesses adjust to high borrowing costs. Markets took this data as another hint that the economy is cooling, possibly setting the stage for a rate-friendly environment in the coming months. The biggest news came on Friday with the release of the January jobs report. The U.S. economy added 185,000 new jobs, missing expectations of 200,000. While the employment rate ticked up slightly to 3.9%. Wage growth also slowed a bit, which is a welcome sign for the Federal Reserve as it works to tame inflation. This softer labor market data helped mortgage rates ease by the end of the week, though volatility remains a factor. Aside from job data, the Federal Reserve's recent meeting minutes hinted at possible rate cut by mid-2025, depending on inflation trends. Meanwhile, home affordability remains a challenge, but inventory levels are starting to rise in several key markets, which is great news. Thank you for tuning in, and don't forget to follow me on Instagram, TikTok, and Facebook at Eli_Weissman. And remember, our main job is to help you and your buyers win in this very competitive market. We will help you make more money getting your buyers' offers accepted and closing them on time. We will provide you excellent communication during the pre-approval and loan process, and we will follow up with your lead diligently, helping you to gain even more referrals going forward. If you want this advantage working for you, give me a call, 718-807-7423. We greatly appreciate all your referrals. And that's a wrap, folks. Rents deep, jobs are strong, and just like bad market predictions, this one is history. Stay informed, stay ahead, and I will see you next week here in our weekly market update. Have a very profitable week. Bye-bye.